What's up, guys? Can you hear me well? This is like my first live stream on YouTube and Kick. Um, just let me know in the chat if my voice is coming in clear. I'll give you guys a minute or so here. You guys can hear me well? I'll wait for you guys to tell me. I want to make sure my mic is coming through. Oh, perfect. Thank you, man. Let me play some music here. Can you guys, is the music too loud or is it good? All right. Adjust this audio. All right, I'm gonna start recording. Now we are recording. All right, all right, all right, all right. Up Drake. The problem is if I play Drake, it might get copyrighted, and I can't. And then what do you call it? You can't hear anything. All right. Let me see if this is better. I'm just putting some simple beats here so we can talk and whatnot. Talk about macro and what's happening. Okay. Anyways, what up, everyone? Thank you for joining my first YouTube stream, Kick stream, live stream, whatever. It's about time I kicked it out of Telegram. I mean, I was on Telegram, what do you call it? For almost a year now. I think I started streaming on Telegram last year in June. And now we're in April of 2026. So yeah, it was good practice, but a little bit too long. But now we're here. So we're gonna run it up. Yeah, the chart color has changed to match the theme and whatnot for you guys and everything. Make it clear. But yeah, let's just get started on what's happening here. So before I go into the charting and everything, let's talk a little bit about macro and crypto, what's been happening, across the world. So the last 7 days has been like kind of crazy, right? Where we had ceasefires, now we don't have a ceasefire. It's all types of shit that's going down, but the data is telling us exactly what's happening. Because as you guys can see, the market is not trading on one clean theme, so it's trying to price down a global growth slowdown, and energy and geopolitical shock, and it's more really complicated on the central bank path at the same time. So those things are not really easy to determine, but if you just look at the higher time frame, look at the higher time frame, things are still bearish, really. Like on the higher time frame, we're not in the clear yet, and this is a very important distinction that many people are not paying attention to. So yeah, we may have on the lower time frames, things are looking somewhat decent, but at the same time, you always got to start out with the higher time frame and then work your way down, really. So it's not pretty much a situation where is inflation up or is inflation down type of market. The one thing that I don't think people are paying attention to, and I saw this on the news yesterday, was Air Canada is canceling a lot of flights due to jet fuel shortage. So now they're looking at potentially canceling routes for a very long time, When I say long time, I mean like 3 to 6 months until they can recoup the lost jet fuel. Because jet fuel prices have gone up so much that airlines cannot actually operate on a profit anymore. And they're running out of storage. So now they have to actually cancel routes and increase pricing. And, they're going to have to partner up with other airlines to get some routes going. Like now in Canada, for example, where I'm at in Toronto, we fly to New York very often. Like there's like, I guess 2, 3 airports in New York, and we have flights to New York every day, multiple times a day to all airports. And now they're actually considering canceling flights from Toronto to 2 of the airports and directing all the flights only to one airport. So yeah, we're seeing kind of like it's like kind of like a lockdown happening all over again, really. And this lockdown is not really COVID like, it's more energy like type of lockdown that many people are not really taking into account. So yeah, this is pretty much a lot of what's happening in the macro side of things. So there is a lot of like geopolitical risk still involved. There is growth risk, there's oil risk, there's rate risk, and there is risk assets all colliding at one time. And this is not something that we see very often, but this is pretty much what bear markets are like, right? You think things are going well and all that type of stuff, and then we reach the bottom, but that doesn't really work that way, right? We haven't ripped the band-aid off yet. That's the thing. We have not ripped the band-aid off the situations that we're facing. And I think the band-aid is going to be ripped off after the midterms. Once Trump loses the midterms, he's not going to give a fuck anymore, really, because he lost it. So now, what is he going to do after he loses? He's going to rip the band-aid off. And that's when we're going to see the final flush happen, where BTC is going to drop 20 to 50%. So we have to take that into account. How big of a drop will happen will determine where we are price-wise, in my opinion, and the type of issues that we're facing. The other thing is, I don't know if you guys remember, give me a second. Yeah, let me lower it. Give me a second. Sorry about that. If the music's too loud, just tell me. You know what? I'll drop it really low, so you guys can hear me well. Let me know if the sound is better now. But yeah, the other thing is, if you guys remember, maybe like 2, 3 streams ago, I mentioned how the global growth rate right now is lower than inflation, and that's a big problem because that means we're technically in negative growth as a global economy. And right now, the IMF just cut its 2026 global growth forecast to 3.1%, and that's another cut to the global growth. And now, after this conflict and everything that we're seeing, they're saying that 3.1% might have been a little conservative, and they're looking at even cutting the global growth to 2.5%. So this is not just some background economist headline. This is the market being told that the risk is no longer higher inflation. The real risk is slower growth at the same time as energy is being stressed out while there is financial tightening. So those two things happening at the same time is kind of the worst setup ever. And this is the type of situation that creates stagflation, which leads to recession or a black swan event. It's not necessarily, we're facing like the 1970s all over again, but this is definitely a market where the central banks have less room to save risk assets if the inflation stays sticky, in the wrong places, like what we're seeing right now. Then you look at um, China. I said this whole war um, is really America versus China, while giving Israel what they want, which is a war with Iran. Now, on the surface, China's Q1 GDP looked decent at 5%. But if you look underneath the hood, the most important detail is that their March industrial output rose to 5.7%, while their retail sales slowed down 1.7%. That headline tells you that the growth numbers are fine, but it's the consumers really that are soft. The output increased because of inflation, but their sales have actually gone down. So this is like this matters more than people think. So if China keeps the production going while the consumer is still weak, the recovery is actually more fragile than what the GDP number tells you. So yeah, um, yeah, what do you call it? I'm just reading some of your comments while I'm talking, guys. With earphone, only one side sounded. Uh, left side only. I'm not sure what you guys are saying. So, but anyways, let me just speak here. Um, so yeah, the back to China. The production is strong, but the consumer is still weak. And the GDP number looks great, but the recovery is actually fragile because the consumer is weak. Now, this is important for like commodities and whatnot, and even honestly for crypto and risk assets. When there's a weak global demand, it eventually bleeds into the overall risk appetite. Like no one wants to go risk on when there's weak global demand. Um, okay, let me stop the music. Give me 1 second. I'm gonna stop the music so I can speak. Let me know if this is better while I continue talking. I didn't know the music was gonna cause that much of an issue. I'm using iTunes from my laptop. Um, but yeah, going back. So when there is like weak global demand, weak global growth, people with money don't see it as a reason to go risk on. That's the simple formula. There isn't really a reason to gamble um, anymore. Well, right, for the time being. And you kind of have to take your moves quickly and make your money. So we saw the PPI numbers for America. They did the exact same thing with the PPI with the CPI, where they manipulated the data. And I don't need to tell you guys that the data is manipulated. We have known that the data is manipulated for quite some time, and Trump will keep manipulating the data to make him look good. So he cannot deny that inflation has gone up, right? But he can deny that inflation hasn't gone up as high as the forecast shows. So if you guys remember, like they keep bringing the data below the forecast by like 0.1%, just to get people to be like, oh yeah, inflation is not that bad. We're supposed to hit 4.1% year over year for the PPI, but you only hit 4%. But the bigger picture is that inflation pipeline is still alive, and it's all like energy pressure and whatnot in the background. As I said, many people are not taking into account to like jet fuel and all that type of stuff. We're only looking at gasoline, but jet fuel and diesel is really, really impacted by this whole situation. Um, so at the same time, the jobless claims fell, but it tells you that the labor market is still not breaking hard enough to force like the Fed to make a move. And I always go through the CME data to determine what the Fed is going to do. I don't go to Polymarket and all that stuff. Even before poly market existed, I was telling you guys go to the CME, and now the poly market data just tracks what the CME does. So always go to the source to find out what's going to happen. Now, on the real economy side of things, many people are not taking this into consideration. I always mention this as real estate. So real estate home sales have continued to drop. So they keep falling down. We keep hitting new lows. We keep seeing that people are not buying homes anymore, right? But if you really want to go down that path and see what's actually happening, sorry, the majority of the home sales that we're seeing, like there has been a huge increase in foreclosures and power of sales happening, people losing their homes and all that type of stuff because they can't make payments. So that's where they're seeing a lot of home sales happen, because when you see a home that's valued at like fucking $1 million and suddenly it's in the market for $800,000 because the bank wants to just get their money out and get the fuck out, some investor will pull up like, here, I'll buy that house for 20% cheaper than the market, because he can then at that point afford the market to continue going down because he bought the house for 20% cheaper. So the inflation pressure is still there. Jobs are holding up, but the housing is weak. So this is the kind of mixed data that creates confusion and doesn't give the market a clear, clean answer on what the rates are going to be. So if the weak spot is the consumer with higher energy costs happening, and there's a tax on spending power that hurts the housing margins, confidence, and travel, and all these type of demands, this is a problem. This is stagflation. That's when people say, oh, oil goes up means inflation's up. That is true, but it's really just an incomplete picture. Oil going up means demand is going down. And when demand is going down, that's a problem. And this is when things starts getting dangerous. And remember, guys, I told you, oil is going to peak in the summer. Wait for the monthly RSI to reach that peak. And once we reach that peak, that's when oil will start coming down. But doesn't mean the market is going to start going up immediately. That is like a slow effect to that. I still believe in late Q3 and or Q4, we're going to see the final flush. And again, the data always showed that the final flush in the market happens just after the midterms, right? And the Fed in America have been very clear. I don't think I have seen them communicate this clearly before, but they're coming out. They came out last week and fully said that there is a possibility for rate cuts. We're not removing that possibility, but only if this war ends quickly. But if the conflict continues to drag on and inflation and growth continues to be impacted, then it becomes harder to manage. Now, here's the issue that many people are not taking into account. All right, I'm gonna draw a little picture here. So you got like, what do you call it? This is the Strait of Hormuz, whatever. Now, when this strait is, all the boats have to pass through here. There's something many people are not taking into account. If your boat is here, all right, starting from here, and you need to get to the other side of the world here, you're gonna need to go through here, all this bullshit into here, right? Here's the problem with these tankers that many people are not taking into account, that these tankers are actually moving at a snail's pace. So it's not like, okay, when I order stuff from China and I'm ordering like, textiles and all that stuff, raw materials, they come at a different speed than these tankers, right? It doesn't take me long to receive my shipment. It takes me maybe a month to receive a shipment from China to Canada by boat. But these tankers are moving at such a slow pace that it takes months for it to receive. Now, for a strait to be even closed for a month, that delay and receiving more gas, oil, whatever, energy in general, is it gonna take time? Like even Air Canada today, or sorry, not today, but this week said that even if the conflict were to end, it would take and we would still have to cancel those routes for a short period of time until we receive more jet fuel to put into our storage so we can go back to normal. So this is an issue that many people in the economy or people that don't really understand what's going on are not taking into account. So they need this war to end quickly so they could Strait can fully open up properly and countries can replenish their storages and everything. Now this is going to create kind of like a PTSD effect where people are going to store more energy than they did before, right? Now you got even the like Europeans are saying the conflict risks weaker growth and higher inflation. All central banks cannot come into an agreement on how they should proceed anymore because no offense, Iran kind of put them in a tight fucking spot that they did not expect. They did not expect. Like the Wall Street Journal today, or what was it today, or some like not long ago, talked about how Trump thought that Iran was like Venezuela because of how Netanyahu and Lindsey Graham presented the idea to them that they would end Iran in a day. And they informed Trump that Iran does not have the balls to close the strait. So they were working off the opinions of those two individuals that were clearly wrong. And I told you guys when the war started, it was early March after they killed Khamenei, that Iran is put in a corner where it's like, it's do or die time. I have nothing left to lose. I have all this weapons. I have all this territory advantage. I have nothing left to lose. You killed my leader. I'm gonna go all out. What is there left to lose for me? What is there? There's nothing. So yeah, the strait is gonna close. So what? Global economy goes down. So what? That's my world. Welcome to my world. You get what I mean? So these people, well, the Iranian people, they don't give a fuck about the global economy going down. Neither does Israel, because Israel controls like the global economy. So to them, they don't really care. They'll be safe regardless. Iran is impacted by sanctions. They're not even part of the global economy. So what is there for them to lose? So Trump was pretty much bamboozled to go into this war, and he thought it was going to end very quickly, but it didn't. Um, 1 second. The war did not end as quickly as they assumed it would, and that's the issue. That is a big issue. So now back in the day, we used to be like, okay, bad data could be bullish because that means new things are gonna happen that would fix it, right? But that's not the case anymore. So bad data is not automatically bullish if because of the inflation. So and now before when we had bad data, we would be like, okay, we have a path forward, right? We could fix this in a way. We have a fix. We have something we can do. But now it's like we have this bad data, we have this situation. What the fuck do we do? What do we do? Now, talking about crypto, as you guys saw my earlier tweet today, I talked about how, and I said this many times, that the bear market is going to be divided into two phases. Two phases. The bear market is divided into two phases. Keep this in mind. And we have officially entered phase two on April 1st. I mentioned that. The first phase of the bear market is to shake us out, shake out the retail, wipe us, make us lose everything. And that phase ended in April 1st. The phase two now, there's nothing left to milk out of these people. Like us, there's nothing left. The majority of us have lost everything in this market. This is the reality of it. The majority of us have lost everything. This is the truth. And now a lot of people have to reset, and there isn't really much to take from these retail traders. So now what do we see? Phase two is called whale hunting. That's how I like to call it, whale hunting. This is when exchanges go after each other. Protocols get affected, funds get affected and start blowing up, projects start blowing up, and people turning on each other. We saw CZ and we saw Binance and OKX fighting each other. We saw Binance and Hyperliquid fighting each other, right? Trying to take each other down. This whole month, we saw manipulation happen by Binance and BitGet working together. Well, actually, not just this whole month. We saw it actually, if you really want to go back to it, we saw the manipulation of Binance and BitGet happen since middle of February. So they've been doing it for the last 2 months, where they pumped things like Siren, where they pumped things like Aria, where they did the whole Rave DAO thing, right? They did all of that stuff. And then they did the XPL manipulation on Hyperliquid. They did the Fartcoin manipulation on Hyperliquid. These are all part of the phase two wars. Then we saw the Drift protocol get hacked for 200 million. That was a pure social engineering, right? And then we saw Aave get hacked. Then we saw a Morpho. We saw Sky. We saw like all of this. Do you know we saw the biggest DeFi hack on Kepler DAO? And what was it? It was for almost 300 million that was hacked. It was that was the biggest hack of all time for DeFi protocol. And as a result of 300 million being hacked from the protocol, $10 billion, $10 billion have left all DeFi protocols. And this is just people panicking, right? This impacted Solana. This impacted every other L1 that has a DeFi protocol right now. Take that in. Because now people are like, wait, if Aave and all of them, which are the what do you call it, the gold standard of DeFi, are getting exploited for this much, why the fuck am I doing DeFi on an unknown layer one that's backed by VCs and everything? I'm taking my money out. And that's why like Jupe Lend, which is on Solana, saw almost 100 million, which is roughly 10% withdrawn already. That's insane, guys, in one day. I'm glad that they were able to fulfill it. But we saw that. And then what do you call it? What's gonna happen next? Take this warning. And today we saw Vercel. I don't use Vercel. I've never used Vercel. But let me give you my thoughts, because Vercel is a agent infrastructure for apps and agents. Now, for me, you might say I'm pessimistic. You might say I'm too superstitious or whatever. But I think one, the S&P needs a reason to go down. Right? Everyone wants a reason for it to go down. We have the war that happened that brought it down, but then AI brought it back up. So what that tells me is, it's so weird when I think about it, but I think there's going to be a major AI agent leak, where a lot of people's computers and their data is going to be on the internet. And I'm talking about everything, if you have your private key stored on a notepad on your computer, is going to be leaked. If you have your credit card, images of your IDs, everything is going to be leaked. Now, for me, I never installed an agent to run my computer. I never installed an agent to run my computer because I don't trust agents. I don't trust AI agents to just fully willy nilly run my computer and openly use it and code it and all that stuff. Like, you guys got to take this in for a second. Do you know how fucked up it is that you just blindly gave access to your AI agent, full access to your computer to do whatever the fuck it wants so it can code a few things for you? But you wouldn't trust your best friend with your computer. You wouldn't even trust your best friend or brother or sister or mother or father with your cell phone. But you blindly gave access to some new tech that is still in production, that's still being tested, that's still making mistakes, that we don't even know if it's actually fully secure, to have full ownership of your computer and fully run it for you so you can have some fucking cheap ass web app get coded for you. Instead, and I was just talking to this to my friend, he was talking to me about perp flow and what I'm building and all that stuff. He was telling me, he's like, you're the first one I've met that's actually using AI in the most secure way possible. He's like, there is an area in AI that many people are not taking into account for, and this is going to be a new business, which is AI agent security. Right now, they're trying to build this business up, but there isn't proper AI agent security, and Versal was kind of like the tipping point, like a hint that, yeah, we could see a huge data breach when it comes to this area. And it's going to be a really, really big breach that is going to actually send a lot of AI companies down. And you guys know these AI companies are the reason why the S&P is even holding right now, and even made a fucking what do you call it, new all-time high. When we look at it, like, the S&P literally made a new all-time high. V refers that shit completely to the tits, right? And it's all thanks to AI companies, really. So what is going to bring it down? I think what's going to bring it down is going to be a breach of AI agents. So for me, when I use AI and I'm coding and I'm building my perp flow and everything, I don't have an agent installed. I don't even have Claude Code installed to just do the coding for me willy nilly and all that stuff. I can't trust some new technology to fully just run my PC, right? I didn't even trust the fucking COVID shot. Like, I didn't trust the COVID vaccine. Now I'm gonna trust this new tech to just fully run my computer and have full ownership of it. That doesn't make sense to me. Logically speaking, that doesn't make sense to me. And now we have a bunch of people all across the world who are brain dead as a goldfish and fully gave ownership of their PCs to their AI agent. And that is a huge, huge, huge risk that we're not really taking account for. So we have the war risk, we have inflation risk, we have oil risk, we have AI agent risk. Yeah, it's all there, and then we have the crypto side risk of exchanges fighting protocols, all that stuff. This is pure bear market narratives being formed right in front of us, really. So you have to take this into account, that Versa was just the tipping point of it, in my opinion. Kind of like when you go back to 2022 in April and March of April 2022, when we had the whole Luna thing happen. And then 1 month later, in May, ironically, on a lunar eclipse, no pun intended, Luna goes to zero. Again, all these narratives are literally there um, for you. The positive side of all of this, though, is I don't know if it's really positive, but the institutions continue to believe in crypto. So, for example, we had Goldman Sachs file for its first Bitcoin ETF, and they're set to launch spot crypto trading. So this is like a real signal that institutions still believe in the long term of crypto. So we have to take that as something positive that will carry us forward, and what do you call it, for 2027. All right. So if institutions thought crypto was dead, they wouldn't do this. They wouldn't want to do this. All right. So the main thing that I have an issue with when it comes to crypto is we don't see any new ideas. Like, there isn't any new ideas really in crypto. The only thing that's really being built in crypto is more stable coin bullshit. That's about it. That and it's kind of scary that a lot of the stable coin stuff that we're seeing is being pushed by the central banks and the biggest institutions in the world, because that tells you is like that's more like a CCP type movement. They want to fucking keep track of everyone and all that type of stuff. Like that this is what's scary about it, right? Now we have like Tether now trying to push the Chinese yuan, and you got the finance minister calling for more euro stable coins, right? So we're gonna see next cycle more stable coins get created, but for certain big currencies like the euro, like the yuan, and all that type of stuff, right? So I'm not a big fan of stablecoin headlines because it's just geopolitics, payments infrastructure, currency competition. It's not really great. So we had again going back to the exploit, which was a DeFi exploit. It was $300 million, $300 million. All right, and Aave is in serious trouble because of this. Now, DeFi DeFi needs to be fixed because this kind of killed the whole narrative behind it. And it's very, very, very funny that, again, you guys have to take this into account. It's not a coincidence. DeFi only looks good in fucking bull markets. DeFi is only sustainable in bull markets. And when you go into DeFi in bull markets, your return is fucking shit. It seems to be only working sustainably and properly when it's in bull markets. As soon as we enter bear markets, we have all these fucking exploits happen and people lose their money because they sold everything. They want to put it they have it in cash, USDT, USDC, whatever, and they want to earn a yield on it to prepare for the bull market. But then you're like, yep, you're not gonna make a yield. We're just gonna take your money. So this is a problem because DeFi seems to only break in bear markets, and that's not sustainable because when you go to the bank and you want to do some type of yield farm or whatever through bonds and all that crap, you don't have to worry, oh, is my fucking bond gonna exploit by some fucking North Korean hacker and I'm gonna lose my money or some shit. This is why DeFi, I've never after DeFi summer of 2020, I've never touched DeFi again. I never actually wait, no. After November 2021, that was the last time I touched DeFi. And what I did at that time was I used it as a loan, and I pretty much, instead of selling my assets, I knew we were near the top, and instead of paying the tax bill of X amount, I put it up for collateral, took a loan on it, got like 80% of the value out, and just let it liquidate because now instead of me selling it for profit, I technically took a loan on it and it got liquidated. All right. So you can, that's the only time DeFi is actually useful. Is even though I know I left 20% on the table, but my tax bill was going to be bigger than the 20% that I left on the table. So that's when you have to actually make the assessment on how we want to use these products, right? So for me, at that case, I did this with Solana when it was 200 and close to $250 back in 2021. I put it up on Jet Protocol, took a loan on it, 80% of the value taken out. Lo and behold, Solana dropped to $8. But I didn't have to pay tax because it was a debt. So this is when you can actually use DeFi smartly for your tax purposes legally. This is not illegal advice. This is legal advice. You can do this at the banks, by the way. A lot of the rich people that are billionaires and worth 100 million plus do this, by the way. If they want income, they put up their stock for collateral at the bank and they take out a loan, and their loan on that stock is actually their income, and then they just repay it back without having to pay tax or capital gains tax or whatever. And if it gets liquidated, it gets liquidated. They still got their money out. So take that into consideration if you live in the burger lands if you want to use DeFi for tax purposes. But other than that, I don't think DeFi is ever really a great product. It's not my thing. Maybe I'm too dim-witted for it, but yeah, it's not my thing. But yeah, this is actually what's happening in terms of macro. Now, if you guys want to really like look at, like, before I go into BTC and everything, let's look at like the S&P real quick. I remove these EMAs, all that stuff. We really gotta go back. So, you guys remember my astrology call? So, one second here. Okay. I think the S&P, okay, we're more around here right now with the S&P. And you see here, I'll show you guys something. We're pretty much printing a very similar pattern to the .com. Okay, so we had the .com. This was the all-time high. At that time, we had a nice retrace, and then in the summer, whatever, we broke it, deviated, all that kind of stuff. Very feels very similar to the .com, to be honest. Very similar structure. You got even this here, and the reason why I'm like, when I look at it on the .com, why are we looking at .com? Or, well, in my case, why? Because the .com pump was probably the last time we had new tech advancement, because this was related to like all these tech companies popping up and all that type of stuff that's happening, something new in the world that no one was used to. And as well, a lot of these, IT tech companies back in the day were not actually profitable. They weren't even making money. Like some of them had fucking insane market caps and they didn't even generate $1 of revenue. They didn't generate shit. But people were betting on them because of speculation. I speculate that this uh, company is going to do great things in the future, just not now. Again, speculation is what drives price up, and once value and speculation is equal, or once the value of the company have met a speculation value, that's when it starts being pulled back. But over here, we saw a lot of tech companies come out of thin air, high market caps, no revenue, just saying, yeah, we're on the internet now. We're creating an internet business. Da 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 da. All that fucking shit. Doesn't that sound fucking familiar over here? I mean, we're seeing fucking shoe companies, switch into AI companies now, and they're fucking pumping 300, 400, 500% just by saying, yeah, we're no longer a shoe company, we're an AI company. What the fuck does a shoe company have to do with AI? Yeah, you can collect fucking feet data, but at the same time, you're still a fucking shoe company that's collecting data on people's feet. That is your product, right? So a lot of these companies are just still pivoting to fucking AI, and they don't their company's weak and they're doing it as a last minute ditch to appease the shareholders. This is the exact same fucking shit that we saw here. The exact same fucking shit. Back in the day, you had companies that didn't do shit, but just saying, yeah, we're going to have something on the internet. We're gonna do something on the internet, and they fucking pumped like crazy just based on that speculation. And then when it came to it, they didn't have any revenue. This is why investors like Warren Buffett didn't buy any .com companies, because he didn't understand their business model. And this is the same thing here. These companies that are pushing into pivoting into AI don't have a proper business model to make money off AI. So I think we're going to deviate and then we're going to come back down. How far down we're going to go, that's a different question. But the last time we had something like this happen, there was a 50% drop in the S&P. So if we were like 50% drop is massive, massive. It would take us around here, roughly. But I don't think where the S&P is going to drop to 3,500. That if we drop to 3,500 or 3,600, there has to be multiple reasons for it. One, bond yields shot up. That's number one. Two, interest rates have gone up. Three, the war and oil commodity conflict is still ongoing. Four, there's a major worldwide AI data breach and no one's information is safe. All these four combined and hitting the world hard is enough to drop the S&P, I think, more likely to 48. Right? But I think the S&P is going to attempt to fill this wick over here later on, because we can't just keep going up based on speculation. Things will get more irrational. Like the market can keep going up to the point where it's not rational anymore. But I think we're reaching that point where it's like, okay, people are not that interested in buying. They don't have money to buy. The last person, like the average person, is not thinking about investing right now. That's the thing. The average person is not thinking about investing. The average person right now is thinking about, how the fuck am I gonna pay my rent? That's what the average person is really thinking about. So there is a big pattern correlation that I'm seeing with the .com top and the current structure that we're seeing. It really kind of like there's like a huge, I don't know, it just mimics it in a way. It just mimics it in a way that does not make me feel comfortable. So this is really, really lining up. I think AI is a great bet. I think it's a great tool. Don't get me wrong, I love it. But like even me, when I use AI, I'm very, very safe with it. I don't use it willy nilly. Like for example, I use three different AIs, but I never have them interact with each other. I do a little bit of manual work. I don't have agents installed. I would use maybe ChatGPT and Gemini to create my prompts for Claude, but I have them analyze what Claude is saying and giving me as a response. Then I use all three to, I use ChatGPT and Gemini to create the prompt to have Claude do the work for me. And I do this manually and I keep it all within the web app for the time being because I'm not comfortable giving access to some fucking tool that I don't know is safe to just have full control of my computer. That's why Mac minis have gone up, blah, 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 all that stuff. But again, I'm not in the it's not in my interest to just go buy a Mac Mini just for something like this. It sounds retarded because by next year, everything will, or in the coming years, they will figure out how to make this safe. That's what I believe. They will figure out how to make AI safe, but at the same time, the tech is not 100% there, right? So we have to take this in. So let's look at what BTC is doing for a bit. I'm gonna break it down here. This is where let's see levels. Okay, yearly open. Let's break it down. So, guys, pay attention to something here. Just gonna show now. This is the first half of every month. Let me just paint this red. You guys can see it better. Now, from the red to blue is the second half of every month. We have started this year. So January, from mid-January to end of January, we saw a pullback. All right. And that continued into February, but even in February, second half, it chopped. It chopped. It went a little bit down again. And it tried to reverse, but it didn't work at the second half. I mean, sorry, first half Feb didn't work, but in the second half of Feb, it continued chopping and pulling down a little bit. First half of March, it went up, but then the second half of March went down. First half of April went up. Now, second half of April, we could go down again. And then we build a move up in the, what do you call it? Again, in the first half of May. You guys see the pattern? Very, very simple. Not that complicated. This is the pattern that we have been seeing for this whole year. First half up, second half down. Feb, we continued up, but then we continued up. We reversed back up, and then we came back down. March, we went up, came back down. April, we went up. Looks like we go down. May, we go back up, and then we go down again. This has been the pattern, the price action pattern that we have been seeing BTC print. That the first half of the month, so if you again longed the first dump of Feb, you probably made money because you longed 60K, closed at 70K. But then second half of Feb, you went back down to the low 60s. Then we came back up to 75K by mid-March. Then we came back down to 65 end of March. Then we came back up to 78K by mid-April. We'll probably come back down in the second half of April to just come back up and make that move to like 80K, 80 something K in the first half of May. And then we chill out, right? That has been the pretty standard pattern that we're seeing when it comes to BTC price action. So right now, at this very moment, it might not be the wisest idea to be giga fucking long, right? It might be time that, okay, we need to chill out for a bit, all that type of stuff. And this is where I got like some levels marked out for you guys to look at, right? So let me pull it out. The issue that I see, the thing is, I know that like, the overall trend, you gotta take this in. The overall trend for BTC is still bearish. This is not. Remember, like again, let me show you guys. Let me go back. Bitstamp. Hit here. Does this look familiar? This started, I still remember this move. Does these two candles look familiar? Right? We always have some type of pullback, a little scam pump, and we go back up. We go back down again. Then we bottom out over here too. Add it here. And over here. Guys realize, like, look at these dates. In 2014, this happened in June, the bearish retest top. 2018, bearish retest topped in May. 2022, bearish retest topped in April. Now we're in 2026. We gotta figure out where this bearish retest is going to end, so we can enter a nice short. Overall, that's the plan. Okay, so this is how you want to do your analysis. Really, you want to break it down in simple form and understand that, okay, the market has been playing out like this on a month-to-month basis, where the first 2 weeks are up and then the last 2 weeks are chop and down. Overall, the higher time frame trend is still bearish from the monthly and the weekly. Okay, and when we look at the weekly has like respected the EMA 200 EMA for the first time. Like it finally grabbed it the last 2 weeks. And again, going back to the race car analogy that I like to use, it retested the 20, 21. Okay, let me just remove the fast ones here. Slow ones. keep your EMAs simple. Keep it simple. Now, the faster EMAs are just telling us we're on a bearish trend on BTC. And we just have to simply respect that. For me, how I'm going to look at it is, one, when you get pullbacks in an uptrend, like this is a bullish pullback. This is a bullish pullback, right? But then you get this is a bullish pullback. This is a scenario how you look at it. This is a bearish trend. This is a bullish pullback. So is this. Bearish. Know the difference of the pullbacks. This is dead trend. This is a dead pattern over here back in 2018. This triangle pattern is fully bearish. Very, very common. So you gotta understand what the price action and the candles are telling you on a higher time frame. They just take longer to cook. And you just gotta understand. If I'm taking a trade right now, one, why am I taking the trade? Two, what kind of trade is it? Three, where am I planning to exit this trade? Okay? Where is my exit? If I have identified that the higher time frame is bearish, that means the pump that I'm expecting, if I'm taking a trade on the 1 hour, I shouldn't be looking to exit on the fucking weekly chart. You should be looking to exit on, okay, I'm gonna stick, okay, I entered on the 1 hour, my exit should be on the 30-minute or 4 hour. All right, don't go up too high, don't go down too low either. Look for your exit around there. So based, if you're entering a trade on the daily, okay, you need to identify what am I doing here. Okay, now when you look at it this way, a lot of people will be like, okay, this is actually a bearish retest on the daily, right? No one's really looking at it this way. This over here last year in 2025 was the support level that held us into a new all-time high. Then we broke this level in January 2026, where we thought we will hold. As you guys can see here, it became a point of breakdown. We had, this is a pure bearish flag right here. And we retested the point of breakdown and previous support level. Now we have retested that level, and I think we're still going to potentially fake out people. And I was just telling this to my friend the other day, this week actually. I was like, bro, when we were trading above 100K, when we were trading at these levels over here, even higher, but this specific range, when we were over here, and doing all of this over here, we dreamt of bidding these levels. We dreamt of bidding here. Okay? We really wanted to open longs here when we were above here. And little did we know, when we got there, we didn't want to anymore. Right? So it's kind of the same thing. It's kind of the same thing, where if we will get back into above 80K for some reason, I really think this is something you should be looking to short, because then a lot of people are going to FOMO and be like, hey, we're back, everything's back, da 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 da, all that crap. You're gonna hear that. No, I'm not looking to what do you call it? To fucking long 85k, because 85k is no longer a bullish support level in my opinion. I'll be looking to short 85 to 90k in my opinion. So I'll get to that. All right. You guys have to look at what is, okay, we saw what the monthly is doing. We saw what the weekly is doing. We're seeing what the daily is doing, right, at the moment. And honestly, it's not great. It's really not great. So I'm not saying you should be shorting right now, but if we do manage to get, what do you call it? What I'm really looking for is this retest of the daily 200s. I'll be looking to short that retest. All right, and I'll show you. Sometimes you get that retest. Over here in 2022, when we ran up to 48k in April, and then we had a giga short entry. You will get those entries. That's the type of move I'm looking. Now, when you look here in the last 2018 bear, we had it here and we had it here. Okay, this was the first one in May 2018, and then we had it in the summer of 2018, and then it led to this move. So keep that in mind. If we do get, going back to the daily, anywhere between 82 at the moment 95k, in my humble opinion, we do get this move in May somewhere around here, it's probably going to be a short. Probably going to be a short, right? And a lot of people are not going to be happy about that, because this is when you're going to see max euphoria. You're going to see euphoria at this area right here more than over here. This is where people will get hope. And I'm not trying to be a negative person. I'm just telling you what the chart structure is like. All right? So again, going back to here, here, oh, text. Where is this? Oh. So the bottom, so the top of 2021 to the bottom of 2022 took 378 days. The top of 2017 to the bottom of 2018 took 364 days. And the bottom of 2013 to 2015 cycle, took roughly 410 days. 406 days. So we are working with this date variance right now. That has been the standard. 3 cycles now, that has been the standard. Why are we going to change now? Because the top happened exactly as we expected. It took 1,000 roughly days. See what I mean? Even the uptrend, just quickly right off the bat, the last two uptrends were 4 days apart. So in terms of 4 year cycles, that is still intact. The data did not change. The data is still there. The data is still there. I think this one, because there's still missing data on this cycle that we don't have for 2011. So, because you guys got to remember, before 2011, BTC's prices were not really on TradingView. So we have to go off the last two cycles. Well, based on the data we have now in front of us, took 1,050, 1,060, whatever rough days. So where are we now? Let's look at it. Where are we now? So you're telling me people think we bottomed in 125 days? No. The bottom is going to happen roughly end of September to, I want to say around here. This is where I think the bottom is going to happen. Just based off the dates. Based off the dates. It's very, very simple. Very simple. So going back again, date range, sorry. Roughly between 360 to 400 days. So 360, we would reach end of September from the top of 1010, roughly 1010. It would be, what do you call it? September 30th to October 30th. I think that's when the final flush will happen, give or take, and we would have bottomed. I think the bottom is going to break, going to be somewhere around here. This is what makes sense to me. We got this bearish pattern happening. All right. Let's say we get a move to here, deviation, then we start breaking down. Now, after that move, we accumulate for a full fucking year, then we go up only. That is the plan. That is the simple plan. Okay? That is very, very simple. Now, just give me a second, guys. We're gonna take a small break just for a few minutes. Then I am going to go into the BTC, ETH, and SOL levels. And if you want me to look into any altcoins, any charts, or anything like that, put it in the chat, whatever chat, YouTube chat, Kick chat, all that stuff. I will look at the charts and do some analysis on it. All right. Just be right back, guys. Okay, I am back. See here. All right. Thank you guys. Let me see here. Okay. So going back to BTC, I'm still on the boat that this is more of um, a bearish pattern being printed. Again, I'm not in the boat that we have bottomed, but that doesn't mean there isn't opportunities. So this is why I created the scanner, because as I keep saying this, that the best marketing is number going up. And in terms of, like, we saw what Rave did, right? Do you think Rave would have obtained that much attention ever if it didn't go up? No matter how many KOLs, how many big accounts tweeted about it and told you to trade it, told you to buy it, and all of that, you wouldn't have done that. You would have only, most people would have only bought or traded it if the price kept going up. Now, why did I say that? More than likely, um, Rave would top on the 18th of April. It had nothing to do with the market or charts or anything. It more had to do with the event. So they did all of this price pump to talk about some rave event that was happening, really. So it really, really came down to them just like showcasing the rave that they're talking, that they're hosting and all that type of shit, really. Now that rave is probably sold out. They probably made their money, they got all the attention, they got your attention, all that type of stuff, and then they fucking rugged it. Then they fucking rugged it. Literally, on the day of the fucking rave, they rugged it. Like, look at this. You can literally see it. Saturday, April 18th, 4 a.m. my time. Topped. This was all planned marketing for the rave event that they had. Now, let's look at some levels. Let's keep it simple. Let's look at some levels for BTC. Okay? I'm not gonna put like the fucking EMAs right now. So for me, it more has to do with BTC needing to hold the top of the range, which is 74K. 74K is the top of the range. This was the top, this was the deviation, and then we had this move. This is the first time we got above 74K for this long. So on the 4 hour, I want to see BTC continue to hold. Okay, I need to. This is the level that BTC needs to hold on the 4 hour. I don't want to see closures back into the bottom of the range, top of the range. Sorry. This is the bottom of the range, which is 63K, give or take. So we don't want to see a retest of that bottom of the range, because if I see a retest of that bottom, it is more than likely going to break. This like, you may catch a scalp, intraday move, whatever, that's fine, by all means. But I don't think we will bottom here if we get another retest of it, right? So this is where I have the main 4 hour level that I really, really want to see hold when it comes to BTC, which is 74K. And sorry, before I go to the 12-hour, let's look at, when we look at the EMAs, again, the EMAs show that 74K is the 50s on the 4-hour, which makes sense. So if we close below the 50, we'll likely revisit the 200s and the 300s, which will be this, right? So for me, I don't want to see a retest of that on the 12-hour. I want to see more of, okay, let's retest. If we're going to break this 4-hour, let us retest, okay, on the 12-hour, because now for the first time in a long time, we are actually above the 12-hour 200s, right? And this is why we're seeing all of this faster EMAs finally coming up, and they're trying to form a trend of some sort, and all of that kind of stuff, right? So we want to see that hold for the time being. We want to see, okay, if the 4-hour isn't going to hold, at least let us hold the 12-hour, in my opinion, which is 71.5K. So we have 74K for the 4-hour. We have 71.5K for the 12-hour, which I want to see hold. Now, I talked about the daily level being 68K, between 67 to 68K, give or take. But what do you call it? Let me remove the EMAs and whatnot. Really want to break it down and look at it. It's more 68.5K, give or take. Okay? Because if you ignore the 12-hour, this will be, I just deleted the 12-hour so you guys can see a bigger picture. This will be the mid-range. This would be the mid-range level, give or take, that you want to see hold. So this is the range that we're in, right? Again, keep it simple. Keep it simple. You don't need to complicate it. You really, really don't need to complicate it. Just keep it simple. So we have this move over here. If this holds, I think we get a move to here, which is 85K. So if this holds, then over here, that makes sense. That'll be great. Right? If that doesn't hold, we'll hope the 12-hour holds. If not, we'll hope that the mid-range on the daily holds. That is what I want to see. Because if the mid-range on the daily closes, we're looking at one, we're probably going to make a lower low. Because right now, the structure is very simple. Yes, it is a bearish pattern. Okay? But we don't want to see lower lows happen for the time being if we want to see that 85 move to 85K. So you got to understand what the price action is telling you. All right? There's the channel. Follow the channel. Now, when it comes to these opportunities, these are actually, yeah, alts are in a downtrend. Alts are actually on a downtrend. No surprise. But when BTC starts doing these moves, that's when you start looking to long alts because, for example, LYN popped out on the scanner 24/7 monitoring. That was the first call. It was like already trending, so it's pulling the last move. If you caught that move, that simple pump that it did was a 25% pump. Even though it's on a bearish trend, but you would have caught a 25% move and you got out not even 1 day later. So it would have been like a trade you do for like 4 hours, 8 hours, and you get out, catch the 25% move, and you get out, right? So even though it did a small move, that 25% move is so much better to catch, right? Than trying to short the market and hold it for months and months and months and months. Because again, these alts dropping, you can, the reason why people look for longs is your return on longs are infinite. There's no limit to how much you can profit on a long, but there's a limit to how much you can profit on a short. So a lot of people, use shorts to hedge a lot of the times. They don't use it, and not a lot of people use it to actually hold long-term positions unless they cut the top and whatever and they just want to chill out. But again, those are very rare. Those are very, very rare traders that you see, and it takes a lot of balls to do it. So ultimately, because I have the 3-day level around these wicks over here. See, I have the 3-day level here. Now, even the 3 days painting somewhat of, a bearish pattern of some sort. So if we hold these support levels over here that I talked about between 68.5 all the way up to 74K. It's a big support, but ultimately this is where BTC has to hold. And if it continues to hold, the move to 84, 80 something K, I think is in the books for May. And I think that's something you may want to grab as a short, in my opinion. Okay, so this is how I'm looking at BTC. I'm looking on the short term, long term, medium term, whatever. I gave you all three outlooks for you guys to understand how I'm looking at it. Very straight and simple. You don't want to overcomplicate it. The market is actually not that complicated. It really isn't. We just overcomplicate it because every time, like, for example, over here, when we had the retest of the 50s EMAs on the 4-hour, guess what? That's when the ceasefire got announced. Okay, and then we had this move. So sometimes it's not that complicated. You just mark your levels, trade what you trade, see what you see, and you go from there. Because everyone needs a reason for a move to happen, and the reason for this move happen was, okay, ceasefire announcement. Now we had this pullback because, okay, as usual, Trump released some bearish news on the weekend, which is pretty standard. So these are the four levels that you kind of want to have for BTC. As long as this 1-day level holds this week, we shouldn't see these lows. This is the mid-range, this is the top of the range. So this is where the support is. You want to see it hold. As long as these levels hold, we make it to the 3-day. If these levels don't hold, we're gonna play around here. That's where it gets very, very complicated. So it's more of a, if this happens, then this will happen. If that doesn't happen, then this will happen type of scenario. Very simple to understand. But again, I keep emphasizing the overall higher time frame trend for BTC is bearish and is going to continue being bearish until end of September and October. That's when we'll see. I truly believe we're going to see the final move for BTC. Let me see the midterm date. Midterms. Yeah, midterms November 3rd. That's when the election actually happened. So keep that in mind. November 3rd is when the what do you call it? Date of the actual election. Okay. 2000. I had the dates here. Yeah, you see here. Going back. I did a lot of BTC analysis. Like this, I'm trying to remind you guys that this was right after the midterms. So the BTC did its big drop last bear just before the midterm election. Then midterm happened, then the final drop happened, and we went up. And on 2018, it was again November 6th. So based on the last two midterms that we saw, what you need to pay attention to is, okay, on 2018, the big drop happened after the midterms. In 2022, the majority of the move happened before the midterms. So what we're paying attention to for this midterm is, where was it here? What you need to pay attention to is the big drop happening before? Then if it happened before, then after the midterm is probably one last tiny flush, nothing compared to what we saw, and then we go back up into, well, accumulation, then back up. But if we just chop, and then we probably go down hard after the midterm. But based on the 4-year cycle dates, this year, more than likely, the big drop on BTC is going to happen. Is going to happen more than likely before the midterms, and then just after the midterm, we get one last final smaller flush. Nothing compared to what happened before. That's my opinion, based on what the 4-year cycle dates are showing. Okay. Now let's look at ETH. Again, guys, if you want me to look, if you guys want me to look for on any alts, let me know. Please look at fucking Pookie. And yeah, by the way, guys, I did take a toilet break. I needed that toilet break. All right. When you talk so much, you gotta take a toilet break. All right. So ETH, again, as I mentioned to you guys, looked so much better than fucking Solana did, and they actually ETH outperformed Solana, I think by 1 or 2% or something like that. But it might not seem a lot to you guys, but keep in mind, ETH is the second largest crypto by market cap. So it shouldn't be outperforming Solana, which is 50 billion market cap, while ETH is sitting at 277 billion. So just keep that in mind. That's why ETH outperforming Solana is not a good sign for Solana. So right now, this is where I would have the 4-hour support. I don't want to see us lose this support, really. But ETH really is telling us, like, hey, and let's see if it holds the support in general. Let's see if it holds it. 2300, give or take, while we're on stream. But again, this is a level that ETH struggled to hold, so hopefully we don't go too far down. Especially, we don't want to break $2,000 on ETH. Well, more 2050. We don't want to break that. So ETH may drop 10%. Let's see. But at the moment, this is where I have ETH support. Again, it is the ETH 4-hour support is like the 50 EMA and whatnot. So it doesn't look great. It looks actually like we're going to the 12-hour support, which is roughly around here. Matches with the 200s on ETH. So ETH 12-hour, where I wanted to see it hold, matches with the 4-hour 200 EMAs, MAs, and whatnot. And over here we'd have the 50s and the 89 on the 12-hour. So this is where we really want to see it hold on the 12-hour. Again, bottom of the range is right here. And daily support that I want to see hold will be roughly the mid-range of ETH. Would be 2050. So remove the EMAs, remove all that. You guys can see here for yourself. This is the support level that ETH needs to hold, or we are revisiting this because we want to maintain a little bit of this higher highs and lower lows happening on the lower time frame for the time being. So if ETH finds support here, it still maintains the higher low structure, and we can go back up to the 3-day scenario. Again, I had 2700. So as long as this bearish channel holds on ETH, which is between 23 to 2050, so 2300 to 2050, and we maintain the higher, as I said, higher low structure because we have higher highs, we can, I believe we can form a higher high. Another higher high around 2700, close to it, which was the previous support level in October before we had this point of breakdown. And even then, as I said to you guys, this is, look how many times here. 2700 is a critical level for ETH. Very simple to understand. You don't want to really complicate it. So if we come down here and then mid-May, we make a move here, probably a good short opportunity to like 1K, honestly. I think ETH will hit 1K. Even lower. Okay? Because it doesn't, what doesn't make sense to me, okay, is this was the 2025 low, this was the high. For us, okay, we come back here. For us to bottom here does not make sense to me. I think we would even break that. And we could be looking at somewhere around here. Yeah, 1K. Like, I see us fully breaking the 25 lows if we revisit it. Very simple. Very, very simple. This is an SNR flip level. This was previously support that turned into resistance. This level 2700 has been resistance for many, many times for ETH, and it takes a lot to break it. And then every time we revisit it and break it, we break it hard low, like you guys see here. Now we form a bearish pattern here, break it down. It's never ever great. And over here, last cycle, when we broke it, 2022, it was very violent move to 1K. All right, it was a very, very violent move to 1K. So ultimately, I think ETH should, okay, if we hold these support levels and we don't break 2K, yeah, I think we can build a move to 2700, which will be a short to ride to 1K, give or take. The issue with shorts, guys, is this shit takes a lot of time. Like, do you know how much you're gonna have to hold through? Like, this was almost 2 months of holding a position. So it will require you to actually have some fucking balls and confidence to hold through this, because I'm showing you the 3-day. All right. Now look at 2022, right? When you came here at 1700, fuck, you know how many people said, okay, ETH has bottomed. Look at this. ETH has bottomed. You would have missed the actual big fucking move. And then when ETH got here, nobody thought it was the bottom because, okay, I need a longer chart. Because when we got here in 22, nobody thought it was the bottom. Everyone thought, okay, we need to make it to here. Or even here. To like 500 bucks. 400 to 500 bucks. So when ETH bottomed here, people didn't think it bottomed. When ETH was here, people thought it was bottomed. Okay? And even when the bottom happens, like look at this. Okay? This is why you don't have to rush. ETH V reversed as a hit resistance, came back down, formed a higher low. Then came back up, higher high, another higher low. And then we saw the run up. And that move alone from here to here to this top over here took over a year. Took over a year. So if you were to hold this position, you would have held it for 631 days from the bottom. But you would have cooked. You would have fucking cooked. You would have made a killer play. So it's the same thing the way that I'm looking at it now. Bottoms don't form like this. Bottoms form like this over here. This is how bottoms look. They're messy, they're not fun, and everyone fucking hates their life and doesn't want to touch crypto ever again in its life. Like, I promise you, when we actually bottom out, many of you are not gonna buy. Many of you are not gonna long. Some of you will not even be in crypto anymore. That's just how bottoms happen. The sentiment is gonna be so bad, you're gonna think there's fucking no way. Like, imagine writing all of this down. You know how bad shit was over here on Sol? Like, people thought the chain was done. It was cooked. We're not ever gonna go back up it again. That was the case. And then they missed this whole run up again. So if we're looking at Sol, Sol's chart is so messy. I don't like the wicks, the candles is not clean structure. I always complain about it. I always complain about it. I don't know why. I never really liked the Sol chart. And then it fucking does a ripperoonie, right? So 4 hour on Sol. Like, you see, it's not even clean when you look at the EMAs and MAs, like the trend and everything. Like, it's the 300, the 200s, and everything is all crunched up together, right? And it's literally just like BTC, it's sitting on the 4 hour support, right? It's sitting on the 4 hour support. Now, again, I don't like when, because it's such a small number right now, I don't like trading it. Unless it's really like, okay, if you gave me Sol below $30, I'll trade it. Give me Sol in this fucking shit range, I don't want to trade it. It's fucking disgusting. Look to short it instead. Right? So Sol, we got these two levels very tight, very tight, and it makes sense. Where the 4 hour is where the 200s and the 300s and everything is. Where the 12 hour is, support is, you don't want to see, what do you call it? A lower low form. Not anymore, right? We kind of fucked around Like look at this. When we saw BTC, when we saw ETH, the range was way more cleaner. Like the bottom of the range was way more cleaner than ETH, and it was printing higher highs and blah blah blah, higher lows. This is not even printing higher highs on the lower time frame. Sol is literally printing lower highs. So, and Sol was a late mover to ETH in last year. So keep that in mind. During this period of time, it looked like shit. It looked like dog shit. So that's why people probably jump onto Sol when they feel the ETH move is done. When it should be the other way around. And that seems to be the case. Okay. And for me, like Sol needs to again, Sol did not get above its top of the range of $92. It did not on this run. While ETH did, while BTC did, while so many fucking altcoins performed fucking amazing. Like even the coins that are on Solana outperformed Solana, which is shocking. Okay, so something is going on there that we don't know yet. Will come out. We don't know yet, but the chart is telling us something is wrong. That's how I want to look at it, because the chart paints the news before the news happen. That is the case. Okay, so Sol, if it wants to have any meaningful run back into at least like look, it's so far away from anything. Like, okay, if we want to even come to here, this point of breakdown, let's go here. This is where I'll put it. Let's get to 106, where Sol bottomed in 2025. Again, look at the difference in the bottoms. I keep mentioning it to you guys. Look at how the difference is in the bottom. Like, look at the difference when bottoms actually form. Look at how this looks. A nice downward channel. Okay? And even then, when we came here, sorry, the shitty fucking channel just coming lower, 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 lower. It wasn't doing this bearish fucking, channel, parallel channel to the uptrend. It wasn't doing that. This is how you start looking for bottoms, is when the coin that you want to get is printing somewhat of a downward channel, printing lower lows, and then you start looking at the dates of the bear market. Did we meet the 4-year cycle date? Are we close to it? All that kind of stuff. What's the sentiment like? You take all of that into consideration to make a proper analysis on how you want to proceed. So going back, do a simple checklist. Did the 4-year cycle date hit, or are we close to it? Number one. If the answer is yes, that's good. Number two, what is the momentum showing at the bottom? What is it showing? Are we fucked? Is the momentum dead in terms of bears? Are they shrinking? All that kind of stuff. And go for it. If all those things are, especially a higher time frame, don't look at the daily, look at the higher time frame. When you looked here on this bottom over here, like look, this was the Sol bottom. This was the lowest the RSI has ever been, and we came and revisited it on this move down. We've never seen the RSI get this low, and we came back to it on Sol, which tells me, yeah, maybe because the RSI and the higher time frames, not just for Solana, but for even for BTC and ETH and all of the market, this makes sense why we are seeing a bearish rally. Things are way too what do you call it? Oversold, that we need to see somewhat of a bearish rally. And I hope Sol makes a move back to the hundreds. Like again, when you look at the weekly, making a move to 106, 107, that matches up with the fucking SNR flip, right? So for Sol to break 100, if you want Solana to get back above 100, one, the 80s need to hold, period. The 80s have to hold. No, don't overcomplicate it. Number two, after the 80s hold, the daily needs to get above the top of the range, which is the 92 something, 92, $93. After that closure above there, then maybe we could look at getting a move to the point of breakdown, which is 106, 107, 110, whatever, just 106 to 110 type of move. We get a little deviation. If we get a deviation over here, and then you see there's bearish divergences being formed on BTC, there's, momentum has slowed down, buyers have shrunk, and it's a perp move, being like it's more perp driven type of move, not spot type of move, and spot people are getting out. You match all this data together, yeah, boom, open a short, matches the setup. You can put a stop, above like 115 or something, and try to ride this move down, where I think Solana is more than likely going to be around here. I know, shocking. 35. 35 overall. This will be amazing. Many people are not preparing for this, but overall, it's very likely possibility. So, if I had to summarize what I talked about chart-wise, strictly on BTC, one, we're entering the mid-month. Mid-month is usually a chop or a downtrend. So we're likely going to chop, and that's when you want to see the mid-range level that I marked out on the daily hold, which is like 68 to 69K. If it holds, we're good. We build a move up into mid-May. Hopefully that move up takes us into the 80s. And then from the 80s, you look for the bearish signs. If they are there, momentum is shrinking, all that type of stuff. The data is lining up, all that type of crap. Yeah, that's when you start looking for shorts. All right, proper shorts, ride for the summer. Sell in May and go away might be real. Might be fucking real this time. Well, it has been real for quite some time, but last year was actually an exception. That sell in May and go away didn't work out. That was really an exception. Let's see here. Okay, you want me to look at data for this coin? I have been seeing it. Look. 2019. 2019. This was one of the best performers of 2021 cycle, by the way. Anyways, it's obviously a high time frame bearish trend, just like every other coin. Broke down the 1010 level on the 3. Okay. Yeah, I mean, looking at the daily, you may catch a move to the 200, just 34 cents. Like in the 30s. Like you make, like, see, for example, this type of move, talking to you guys, this type of move over here, this gap fill, if the, what do you call it, 17 cents continues to hold on theta, which is these EMAs over here, You may catch a move at 50, nice 50% move, a little bit over than 50% to the 200s, right? That move right there is equivalent to fucking like look at how long of a short you would have to catch from 1010. Like you would need to catch almost wait 1 month downtrend to catch the same type of move. Whereas if you wait like a week, you can catch a 61% move and ride it out and close. But you got to keep in mind that this is a bearish trend move. So if you do get support over here and then we do tap here, that's more than likely your exit because we're probably going to go much lower over time. How much lower? Well, you'll be surprised. You will be surprised because you can actually go down to 5 cents on these alts. It can fully retrace the whole fucking move. Keep that in mind. When we are looking here, the 12-hour, yeah, it's probably gonna be somewhat of a pullback that happens. And this is where, again, see the 200s 4-hour matches up with the daily oil. So if you get a retest of the 400s, you may, again, because now I'm looking at the 4-hour structure even more and closely, if you get a retest here, it's more than likely not gonna go to the 30s. You may catch a move from like more like a 20% move. And you can put a stop below this. So 18 with a stop below 16 and a half, trying to catch a move to like 20 something. $22 to $23, give or take. Okay, so I've been stacking very low, and is that I'm hoping the devil will make it. What is the low cap token that you're holding? And the dev will come back? Okay. I'm not sure. Just let me know what the coin is and I'll look at it. But again, let's look at here real quick, funding rates. Look, guys. Funding is still massively negative. Like, look at here. BTC, negative on Binance, OKX, Bybit, KuCoin. Fuck. Every made, like, overall, big negative. ETH, negative. Solana, negative. XRP, negative. Fuck. Hype is positive on Binance, and it makes sense why they're doing it, but like a lot of like the main 3 coins that people are longing or trading or whatever are negative. So I don't think this is pure bear market like funding, by the way, to throw people off. Like we are officially reached April funding rate levels, and for I think we need to flip. That's why I think that the chop move on BTC will hold if this funding stays negative, and that's why I'm a little more confident on the move to like the 80K plus. Everything is still negative. Let's see here. CME, no rate cut. Still, no rate cut, and we have FOMC in 10 days, by the way. So there is going to be a chop fest in 10 days for the FOMC, as they're not expecting a rate cut and they're not expecting a rate hike. When we look at the economics, whatever schedule, market schedule, there's really nothing to look forward to between now until the 29th, which is FOMC. And then after that, we have the PCE and all that type of stuff. GDP. So you look here, after FOMC, they're going to officially announce the GDP. So we have that to look forward to, I guess. But yeah, it's literally 10 days from we got no major economic thing to consider aside from the war, but like in terms of data until the end of the month, which is FOMC on the 29th, and then we have the PCE, GDP, and all that type of stuff, and happening the next day. And around just before New York Open, we're gonna have all this data out. All right, so don't expect any rate cut, rate hike to happen. All right, so let me see here. Pepe. Yeah, Pepe looks like shit. Like Pepe rejected the 189 EMA NMA on the daily. Yeah. The structure on Pepe is not great. And you guys know it's very simple rule. Actually, here. Okay. So for Pepe, just looking off the weekly, you guys know my rule about wicks. The wick gets filled fully and we close below it. Fuck. We are looking at here and we're looking at here for Pepe, higher time frame. This doesn't mean we don't get a bearish pump, but yeah, the pump in December, end of December, early January was straight to the 200 EMA on the weekly. I don't think we're gonna get back up there. If we do, if the market decides to pump again, I put it here, which is the 34 EMA on the weekly, which kind of makes sense. Let's look here. We're gonna move here, reject, and we continue this little, little pattern that we're painting of lower high. So if we come here, reject, probably a nice short on Pepe. We may wick on the weekly to around here, but ultimately I think we would close the weekly below and then move. So this is how I'm looking at Pepe. When I look at, and again, the 4 hour and all that stuff does not look great. I would not be really focused that hard on Pepe. I don't know if that's, I don't know, man. Feels like it's really struggling, but again, that move, if we do get confirmation like from here, like as I said to you guys, this type of move resistance is literally a 50% move. This is why it's not bad. Okay, if you identify that we're gonna be entering kind of a bearish trend, it's not really a bad idea to actually sorry, not bearish, we're entering a bearish rally. It's not really a bad idea to look for longs, because those longs will make you a ton of money. Those longs will really make you a ton of money, and they will be short-term trades. Then you go back to chilling or you open a short. Okay. Mm. Let me see here 1 second. Not. Anyways, there is some alts like I don't know if you guys pay attention to this. I don't know what this fucking alt is. Dexy. But it's on a fucking uptrend and a half. Does anyone know what this fucking altcoin does? It keeps it kept showing up on the scanner non-stop. And then you got like lab. This kept showing up on the scanner too. So there are opportunities. There are opportunities. TRX showed up. Like look at TRX. He's definitely scamming this motherfucker. Okay. Piverse kept showing up. Like look at Piverse. Piverse showed up on the scanner first time February 14th. Around here. And it kept showing up again. Let me mark out all the dates. 14, 21. And here it showed up. And then now, today on the 12th, look at this insane fucking run. Today it showed up for 12:30 p.m. Jesus. So the scanner, again, as I'm building and everything, what I want to tell you guys about it is there's a lot of people that want to sit and be like, okay, the scanner told me to long this, but it retrace. The thing is, what the scanner is doing is showing you what the 15-minute, 1 hour, and 4 hour time frame is showing. Number one, not the daily. It's not scanning the daily. This is up how you want to trade. The scanner is up to you and your discretion and what type of trader you are. So you may get a call, like for example, like today, Ivers came up here. Someone might have be like, okay, you know what? I'm just gonna close it here. I'm done. This was a big move. He would have been happy. He caught a nice move. He held it for a little bit of time from 12:30 to 2:45. He caught a 65% move. You get what I mean? This is the purpose of the scanner, is to find you whether you want to build a swing position or whether you want to build a scalp position intraday. That is completely up to you. What you need to do is you need to assess the trend. Number one, what is the altcoin trend that is showing on this project? Is the overall trend bearish or bullish? Number one. Number two, what is BTC doing? Is BTC bullish or bearish? If BTC is bearish, more than likely the altcoin that you're going to trade is not going to give you a big swing. But that's when you need to take context into situation. Like Piverse, for example, has 143 million market cap and 33% of open interest to market cap ratio. So it's not considered a low cap, but it's not a large cap. It's not even a mid cap. It's transitioning between low cap to mid cap. I would say Hyverse was to identify as anything, it would be bisexual, right? That's the truth of it. So you when you're trading the scanner, you need to. That's when your skills as a trader kicks in. Like for example, the scanner showed Initia on the 4 hour, right? Let's look at it. The scanner popped Initia here on the 4 hour. Now, if you're someone like me who understands how bearish, not sorry, how trends work on the 4 hour, 1 hour, blah blah, blah all that type of stuff, you would have taken a long from here because one, we have retested the 200 EMAs, the 300 EMAs, and it's held. Okay, number one, and we saw we have this wick here, so more than likely we'll build a move to this wick, ignoring this deviation. This is how you can just take a fucking simple move that you ride out for a few days. Okay, you catch a 17% move and you dip while you put a stop below the wick right here. So what happens is your stop will be below this, your TP will be here. Okay, from that point on, you're building kind of like a long position. At that point, you are entering almost a 5 hour trade. So your risk to reward is good. This is how you need to plan how you want to treat the scanner. It's like, okay, the scanner showed Initia. Where is Initia on the trend? Okay, on the 4 hour, it seems like it is just starting its trend. So that means I could have a good risk to reward on this trade. I can put my stop just below the loss of trend, and I see a wick here. I'm gonna enter the move to ride this wick. Okay, to the wick. You catch the move and you get the fuck out. Done. Over and dusted. Don't overcomplicate it. So this is how you would enter something like this on the scanner that is just starting its 4 hour trend. Now, if you were to, I don't know, let me grab another coin just to give you guys an example, another example. We talked, let's go back to TRX. Now, TRX popped at 33, 30, okay. Let's just say, okay, we're riding this 4 hour trend on TRX. This was the start of the trend over here. Now, if you were entering the TRX trade over here, your stop is going to be simply below these lows. Loss of trend. You can be like, okay, I think we're gonna go here. And I think, okay, if I'm entering here, we shouldn't lose 28 cents. And you're entering it here with a stop below here. Very simple. You take the fucking setup and you go from there. Very, very, very simple. You don't complicate it. You don't want to, make it harder than it is. This is if you're entering at the start of the 4 hour trend. Now, what if you got the signal over here? That's a different story now. Okay? You cannot be like, okay, I got the signal to long this pullback over here. And if you are longing here, you are obviously thinking we're going to make new highs. So you might have decided to close it on the weekend. But you cannot put a stop here. That's fucking retarded. You're a fucking retard. Okay? You can't, you have to put a stop. Okay, if the, where does the trend change? Where does the trend become invalidated, where this long over here is not valid, where this move doesn't happen? This is where you need to think, okay, I'm not longing the bottom of the trend. I am technically longing a little bit late in the trend, more a little bit after the mid of the trend. Let's just put it that way. Okay, you take your 4 hours, EMAs, whatever. Be like, okay, you know what? If you can put a stop here, and put a stop below this low, this wick, if you want. But ultimately, your entry should be respected because you're at the 8900 EMA. So if you get a closure just simply below here, more than likely it's going to go to the 200s and or even the 300s. More than likely, if if you were to actually remove the EMAs and understand a loss of these lows, okay, a loss of these lows over here and closing below this wick is more than likely going to send you here, and that could be a chance where it just does a bearish retest to your entry and you psyched yourself up like, oh, we're going to go back up for the trend, and then it comes back down, resets the whole move. So this is how you got to look at it. Be like, where am I entering on the trend? If you're longing here, you expect the lows to hold. You don't want to close below this wick because then we're coming down here, right? Then we're not actually forming a clean trend anymore on the 4 hour. Those higher lows stop being higher lows. The trend breaks and you get a lower low, which means the next move is more than likely a lower high. So understand when you're using the scanner, number one, you need to identify where am I on the BTC trend, number one. Number two, where am I in terms of the alt trend that I'm looking at the moment? Like where is this alt on the trend? Is it starting the 4 hour trend? Is it in the middle of its 4 hour trend? Is it am I catching the mid trend to the blow off the top type of move, or am I catching the start of the trend where I can ride it out for like a week or two until BTC starts looking weak and then I get the fuck out? You need to identify where you are longing, okay, in terms of market structure, and where you plan to close. You need to have that already in your mind. And where does your long become invalidated in terms of the market structure? So in this case, in terms of TRX, going below 31 cents would break the market structure because more than likely we're going to drop to 30 cents where we start forming lower lows. So that's why I would put a stop if we fill this wick of this low, and because more than likely we're going to reset the whole move. At that point, you want to get out of your long and move forward, and or find another setup, right? So before I end the stream, this has been my longest stream ever. I don't know if you guys want me to look at any alts after. In general, when it comes to trading and whatnot, it's not easy to be a trader. I'm telling you that right now. We are probably doing the hardest job in the world for the most, like, because it's such a hard career. It's really hard to move forward when it comes to trading. It's really hard to identify if you're doing, the only way to know if you're doing the right thing is if your money is going up, really. And a lot of people have a hard time identifying if they got lucky or if they're actually skillful when it comes to trading. But the problem is a lot of people operate from this mindset of fear, which is actually the biggest killer for them. A lot of people think in fear, act in fear, and all that stuff. So the best thing you can do is understand that what you are trying to get is on the other side of that fear. and fear doesn't actually mean you should stop what you're doing. Fear actually means you should go. Yeah, so take the opposite side of that trade. When you are scared and fearful and whatnot to try anything, take the opposite side of that and go. Because what usually happens is, after you go and you make the move, that's when you start getting clarity. That's when you start thinking about, okay, maybe I did this wrong, maybe I did this right, maybe this worked out, maybe this didn't work out. Whatever happens happens, but you'll gain clarity after you make the move. Not You never gain clarity before the fucking move. Now, the other thing when it comes to becoming a trader or becoming whatever you want to do, right? Most people feel like we live in this fucking bubble where we feel like we need the permission and the approval and all this fucking bullshit from our friends and family and our colleagues and peers and neighbors and people that don't even fucking know us to become who you want to be or who I want to be. Let me tell you that life doesn't work that way. You actually don't, let me tell you a secret, you actually don't need permission from anyone to become who you want to be. That's the secret. It's very simple. You actually don't need any permission from anyone to become who you want to be. And the life that you want, the goals that you want to achieve is literally on the other side of your fear. It just involves you trusting yourself that you will figure it out and gain clarity. The biggest mistake you can do, and I've done this and I'm a victim of this, and I'm trying to actually really hard to remove this, is overthinking. Overthinking keeps you stuck. It keeps you like not only stuck, overthinking hurts you more than failing. At least when you failed, you tried, you made a move, you gained clarity, you got something out of it. Even if you didn't get the reward that you're seeking, you still got something out of it. But overthinking just keeps you in the same spot, living the same life, doing the same shit because you're scared. So avoid overthinking as much as you can. Just fucking try something, bro. Just fucking try. And the best thing is about this is, and this is something that I learned in the last year when I operating in business and all that type of stuff and talking to people. Everyone thinks that the person that you are looking at or you're comparing your life to has it all figured out. But I'll tell you, they never have it figured out. No one has it ever figured out. They just started, man. People like you sometimes see these people that are streaming and all that stuff, and you think they got it all figured. They didn't get it all figured out, bro. And even the top traders don't have it all figured out. But they just started, and they were a little bit lost along the way, right? And a lot of people that what do you call it? That keep going forward, that don't care about fear, and always looking to learn, is those are the people that built the most confidence. Because your confidence and your self-esteem actually gets built through you doing things that scare you the most. Like, it's so fucking ironic. Like, the reason why a lot of men are not confident in themselves today is because of fear. They are fucking scared to do something, and they're scared because they'll fail. That fear of failure strips their confidence away, and then they look at someone that has what they want to achieve and they lose even more confidence. So it's literally like, just fucking go. Just fucking go. You can listen to all the motivational podcasts. You can listen to all the people in the world that telling you go do this, go do that. You can go fucking listen to Andrew Tate and join his program, all that fucking shit. But I'll tell you, none of that shit will actually help you. It's sad, but it's fucking true. But none of that shit will actually help you. What matters more than you actually motivating yourself is consistency. You keep showing up, you keep showing up, you keep showing up, you keep showing up, you stay consistent with it, right? And regardless of how you feel, you still keep showing up. You still keep showing up. And you build this consistency pattern that regardless of how you feel, regardless of what you're going through, you still show up to learn, to try, to fail, to succeed, whatever it may be. That consistency, I swear to God, is the difference between someone that made it in life than someone that didn't make it in life. It has nothing to do with motivation. It really has to do with consistency. And if you like, look at you guys, everyone here, everyone here has survived every single day in their life without realizing it. Every single problem that you thought that was going to take you down has worked out. And most of the things when it comes to trading, because I'm a trader, so when it comes to trading, most things will work out when you just stop hesitating. Don't be scared of failure, man. You'll take a loss on a trade. So fucking what? So what? Okay, just keep trying. You like, you know how Jay talks, these EMAs never work, blah 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 blah. Let me tell you, like, EMAs work and don't work. Surprise. Yeah, I know. Support and resistance work and don't work. Wow, shocking. There's no such thing as a strategy that works 100%. You just have to know what the probability of that strategy is and apply it correctly. Like, if again, Jay just trades off the naked, like, 1 minute chart, whatever. That's his. That's how he wants to shoot himself in the foot. But you got to take the context of the situation that's happening on the chart before you consider opening a position, right? So to become the person you want to become, you want to start acting like that person. You can't just one day wake up and be like, I got $10 million in the bank. I'm going to become the person that I always imagined to be. That doesn't work that way. If you were a bum before that 10 million in your bank, you'll still be a fucking bum after it. That's the truth, right? So start becoming and holding yourself accountable, working on your perception of how people perceive you. People perceive some, like, if you show up every day and you're consistent and you work hard and you keep doing that, even if you're not doing well, people will still respect you more than someone that just sits on his ass and is a fucking negative person, right? So you gotta take that into consideration. Start just becoming the person you want to be, and you know, many people like die. When I say die, I don't mean figuratively. Like, they kill themselves mentally over pressure. But the truth is, pressure is a privilege. Being in pressure is a privilege, and many people don't understand that privilege. So if you're curious and you struggle and all that type of things, bro, it really, really is a privilege to be in that position, because that pressure is what's gonna make you, and the mistakes are not the failures. And don't ever perceive someone failing or making a mistake. Don't perceive them as a bad person or anything like that. When you make a mistake, that's feedback. That's direct feedback that you have obtained. That's data. That's your own personal data that you have obtained for yourself that you are neglecting. Okay, this didn't work out for me. Dissect it. Why didn't it work out for you? Once you figure all that shit out, then you can fucking advance yourself, man. It's not that fucking hard. It really isn't that hard. But you're making it hard for yourself because you are afraid of failing. And bro, I'm telling you, failing, everyone fucking fails. Everyone fucking fails. Like, I'll tell you this. Like, Elon Musk is going to be the world's first trillionaire, more than likely. Everyone here that's listening will call him a success. But in his eyes, he's a failure. And I'll tell you why. He doesn't judge, or he doesn't look at what he's accomplished by his net worth like we do. He doesn't look at, I became a trillionaire, I'm successful. He doesn't look at it that way. In his eyes, He's a failure until SpaceX does what he said it will do. That means I'm going to Mars, I'm gonna put people there, yada yada, all that stuff. That vision that he had for himself, regardless of money, regardless of income, that's secondary. He knows that's gonna come because that's just a side effect. Like you took medication, and the side effect of that medication is money. Is the same thing. He has dreams of achieving SpaceX to reach those limits. He knows if SpaceX reach those limits, reach those goals, get to the point where he has envisioned for himself, the side effect of that goal is money. So he's not focused on the money, he's focused on the mission. So in his eyes, he's not a success, he's a failure until SpaceX does what he said it will do. So this is the difference in mentality between an elite person and a person that's fucking lazy, really. So it's up to you. It's really up to you. I'm building the scanner. I'm showing you guys the like fuck every single setup has showed up on that scanner. All the top scanners. If you didn't make money, if your portfolio didn't go up by getting spoon fed the best fucking charts the last 2 fucking months, then something is fucking wrong. Honestly. And you need to sit down and be like, why am I not taking risk? What am I afraid of? What okay, if you're afraid of losing money, drop the position size. Drop it. Instead of going, okay, if you open $50,000 position sizes, fucking drop that. Cut 75% out. Cut 75% out. Use 25% position size. Learn. So, and the losses that you take from learning, call it tuition, because now you dropped your risk by a lot. But now this losses that you're taking is fucking tuition, right? So it's the same thing. The scanners are literally like I started a small side portfolio just to trade the scanners where I'm comfortable losing the portfolio. I'm comfortable, but I have to try it myself. I have to learn for myself. I have to give this shit a proper chance, right? That what I'm building. I look at the charts that I like. I take the charts, I trade it, I make my money, close my position, and move on. The thing is, everyone feels like they have to trade every single day. If I don't, you don't have to trade every single day. The scanner is not designed for people to trade every single day. But if you want to do that, that's up to you. But the scanner is designed that whenever you want to take a break, you're comfortable taking a break. That when you want to jump back in, you don't need to scan the fucking charts again. You don't need to jump and do all this work again. It's automatically running for you to keep doing the work. That when you want to come back into trading a week later after making money and all that stuff, it's still gonna give you the charts and the setups that you should look at. This is what the scanner is designed for. It's to make the life easier for you to take breaks, for you to chill out, have mental resets while still growing your portfolio. And we saw a fucking glimpse. We saw a fucking glimpse of the power of the scanner when BTC went on a tiny uptrend. Now imagine how powerful the scanner is going to be when BTC is in a 2-year uptrend and what type of money you're going to make. And that small portfolio that I opened on the side just to trade the scanner is up almost 200% with proper risk management. So there really isn't an excuse for you not to try the scanner or actually trade and learn and all that type of stuff. Okay? So actually, this is, I always said the bear market is the best time to learn. The bear market is the best time to build. The bear market is the best time to adjust and keep track and make notes and all that fucking shit. Because once the bull market hits, you will have zero fucking chance to do any of this. Because shit will be so fucking fast that you won't be able to breathe. Alright? So quick, I'm gonna look at APT real quick, just because someone asked me to. Then I'm gonna end the stream because I've been going on for 2 hours and a half. But anyways, APT still, by the way, still on a downtrend. Keep that in mind. This is, yeah. Oh my God. Yeah, see, APT is not really looking that great either, obviously. Um, I mean, it's sitting right on the 400s, 4 hour 200s and whatnot. You got, like, you may catch a move to a dollar. If it makes a higher high, it may go to like a dollar 10, give or take, if this 200s hold on the 4 hour. But if it doesn't hold on the 4 hour, these 200s, then you could be looking at a move back below um 90 cents, like 85 to like 88. Okay, let me see here. All right. Yeah, APT is, I mean, not look, I'm not gonna lie. The only fucking angel investment I made that made me money was fucking APT. I sold my fucking investment fully around, it was, this is when I was allowed to get out. Like $9-10, and this was like the level I was allowed to buy it at, roughly. Wasn't much, but fuck. It was the only fucking angel investment that I made that made me money. Angel investing fucking sucks, by the way. Angel investing fucking sucks. But yeah, if APT breaks a dollar, whatever, a dollar 10, we could be looking at dollar 60. But yeah. Anyways, guys, this was a great first stream. Thank you again for joining. I mean, hopefully, if you guys have any feedback, let me know in the Telegram chat. Things that I can do to improve it, whatever. I know the music wasn't great, but I'll figure that out later. And yeah, again, thank you guys. What do you call it, for joining? And yeah, I'll talk to you guys later.
Working on a weekend like usual. Way off in the deep end like usual. Niggas swear they passed us, they doing too much. Haven't done my taxes, I'm too turned up. Virgil got a paddock on my wrist going nuts. Niggas caught me slipping once, okay, so what? Someone hit your block up, I tell you if it was us. Man, a house in Rosewood, this shit too plush. Say my day's a number, but I keep waking up. Know you see my text, baby, please say something. Wine by the glass, your man a cheapskate, huh? Niggas gotta move on my release day, huh? Bitch, this is fame, not clout. I don't even know what that's about. Watch your mouth. Baby got an ego twice the size of the crib. I can never tell a shit, it is what it is. But said what I had to and did what I did. Never turn my back on FBG, God forbid. Virgil got a paddock on my wrist, doing front flips. Giving you my number, but don't hit me on no dumb shit. Working on a weekend like usual. Way off in the deep end like usual. Niggas swear they passed us, they doing too much. Haven't done my taxes, I'm too turned up. Virgil got a paddock on my wrist going nuts. Niggas caught me slipping once, okay, so what? Someone hit your block up, I tell you if it was us. Man, a house in Rosewood, this shit too plush.
It's cool, man. Got red bottoms on. Life is good. You know what I mean? Like,
100,000 for the cheapest ring on the nigga finger, little bitch. Ooh, I done flew one out to Spain to be in my domain, an automata, bitch. Ooh, dropped $3 on the rain, cause it been the truck, little bitch. Ooh, I was in the trap, serving cocaine, they ain't been the same since. Ooh, granted, she was standing right there while I catch a play on the brick. Ooh, I made them little niggas go haywire, Taliban in this bitch. Ooh, I done been down bad in them trenches, had to ride with that stick. Ooh, who gave you pills, who gave that dust, Pluto sent you on the lick. Ooh, too many convicts that rolled me to play in this shit. Ooh, round about nonsense, get old summer spreading this bitch. Ooh, they had the counter like lighting it up, nigga, anybody can get it. Ooh, I'm on a PJ lighting it up, backwood full of sticky. Ooh, I'm tryna tote that Draco in London, and it's extended. Ooh, they gotta stretch a nigga, how we gon' die for this shit? Ooh, yeah, I ride for my niggas, I lie to my bitch. Ooh, we some poor, high class niggas made it, we rich. Yeah, I was at the band though, got a penthouse for a closet. Ooh, it's like a shando, live on my neck, my wrist. Ooh, I got pink toes that talk different languages. Ooh, got promethazine in my blood and Percocet. 100,000 for the cheapest ring on the nigga finger, little bitch. Ooh, I done flew one out to Spain to be in my domain, an automata, bitch. Ooh, dropped $3 on the rain, cause it been the truck, little bitch. Ooh, I was in the trap, serving cocaine, they ain't been the same since. That's by the time I call her Serena. I go tremendo for new fettuccine. All fat though, claret the pinky. All fat though, we order the Fiji. I'm in the loop with the voo, I'm in the loop with the woo. Which one you working? I put your face to the news, I put the puss on the shirt. After I murdered it, make go shoot up the hearse. Cost me a quarter bird. Nigga's birthday and you a maniac, a fucking alien. How you spurting? Got that kitty cat, I'm having fun with that. Going Birkin. 100,000 for the cheapest ring on the nigga finger, little bitch. Ooh, I done flew one out to Spain to be in my domain, an automata, bitch. Ooh, dropped $3 on the rain, cause it been the truck, little bitch. Ooh, I was in the trap, serving cocaine, they ain't been the same since. Ooh, 100,000